Hello and welcome. This is Ed Ross again. Hey, I wanted to take a little bit of time and help explain to you what I believe you should do over the next 5 years to be the most successful. First of all, everybody tries to predict the real estate market. Predicting the real estate market is extremely critical on how well you can do and how many mistakes you'll be allowed while you're doing your investment. A lot of people tend to enter the marketplace after everyone else has entered the marketplace. Typically, real estate market cycles run 7 to 10 years. We had a approximately 9 year run before the real estate crash, just a few years back. When that real estate crash occurred, we have approximately a lull of another 7 years. Here's the good news. The good news is we're near the tail end of it, and you always want to invest when things are still bad, when there is not a herd of cattle entering the marketplace. When I call it cattle, I mean everyone else, all the other investors. Because if you have a lot of competition from other investors, you can't buy low. And you want to buy low and then you want to sell high. Unfortunately, though, unlike the stock market, the real estate market runs in 7 to 10 year cycles, so your highs and lows are long periods of time. The good news is right now, for the next several years, you're at a period of time where you're buying at the low or you're buying at the beginning of the appreciation cycle. So you have at least 7 to 10 years of this ride. So that is excellent news for any investors. So it is the right time to enter the market, regardless what anyone tells you. It is the correct and best time. However, over the next 5 years, what you have to plan for is you have to know where to buy, what to buy, and how to buy. And everyone says, well, I know that. Someone tells me this is a great area, so I'm buying this house because this house or this rental property is going to go up in value. Well, realistically, not all properties are created equal. And often people that I work with and students I've worked with at Learning Addicts and across TV and in my seminars, I've learned that many folks make the extreme mistake of saying this is such a fantastic area. This area has everyone wanting to live there, and it's very exciting, and it's the place to invest. Well, a cycle in that area may have already passed you by, or that area may not offer the affordability index that another area will. You often can find that the best areas, or maybe the areas that you wouldn't be willing to live in if you're a real estate investor, you would want to rent them out. So you have to be very careful. Just because something sounds like a great zip code, great location, it isn't necessarily a great location. I go into great detail to explain to you what I call the spill zone. The spill zone is taking geographic neighborhoods, areas, zip codes, demographics, and matching the area with the highest appreciation and forecast, the highest and greatest rents that you can achieve, and if it's your own personal residence, the most likely to give you the greatest appreciation over a several year period. That is done through a forecast. That is done through appreciation forecast, done typically only by the most wealthiest investors in real estate in the world. Instead, I give you the tools that only you will have through my program that typically you have to pay $3,000 to $5,000 without. But I give those to you at zero charge. I do that because it is what all the large investors have over you. And the goal is you have to compete with the rest of the market. Your competition are those other investors in the marketplace. So having heavy competition, you have to know how to beat them. And by beating them, you lower your risks, but you also increase your returns over a period of time. And given that real estate is in such an ideal time right now, knowing your neighborhood, knowing the demographics of your neighborhood, knowing how the forecast is going to apply, you can set up a real strong plan over the next 5 years to invest competitively to make the most dollar in your pocket. Now, here's another thing that you have to understand. Um, the only way you really figure this out is through modeling. It's called the econometric model, and the economists use this at all times. Large investment firms, real estate investment firms use it. Real estate investment trusts use it, and on top of that, they use a lot of other financial tools. Now, you don't have to become an expert as an economist to know how to forecast appreciation and determine where you're going to make the most money, because I really give all that to you. So I make it so simple, keep it simple concept that you can just walk your way through it. But you have to remember that this is an investment. So when I say that you're doing real estate as an investment, it's just like buying a stock. Now, what do you want out of an investment? When you do an investment, what you want is you want the highest rate of return. The rate of return is how much money I'm going to make each week, month, year that I own this particular investment. So when you turn around and buy a stock, you say, oh, I want it to go up 10% over the next 8 months, and that's really why I'm buying it. Or I want the dividend from it. And the dividend is like the passive income. It's the income you just automatically get because you own that stock. Well, in real estate is very similar to any fundamental investment you do, whether you're buying art, whether you're buying, antique cars or antiques, or you're buying gold or jewelry, etc. All these things are managed the same way as real estate is managed. You have to know the appreciable value on your asset, how much it's going to go up in value. You also have to know what your return is on it. Your return, if it's a rental property, is going to be cash flow. And if your return every month is negative, meaning you're temporarily holding onto this property and you're losing money, that has to be taken into account. Because the only kind of investing you want to do is the kind of investing that fills your pockets up with as much money as possible, as fast as possible, and to give you positive returns in every aspect of that property as quick as possible. Now, in short-term investing, that's sometimes what you do. You capture a product, you sell it real quick, and you monopolize on the return, and sometimes you do it with no money down. That I do go over some of those programs with you, but what I really like to focus on is how we make you a multimillionaire. To make you a multimillionaire, you're going to have to treat this like any other investment, whether it was a stock, or whether it was your money in your 401k, or it was your money that you invest in something that you feel is valuable, like jewelry or diamonds, etc. That is the way we're going to teach you how to invest in real estate. We're going to give you the tools to make it easy for you to do it, so that you don't have to think about it. You don't have to be mathematical. You don't have to have any educational standards to do it, but you have every advantage that your competitors have in the marketplace to beat them. And that's ultimately some things that we're going to talk about here on some tools that you use to launch this for you. So here, it's a beginning start for you to understand how you do appreciation to make money, how you go about it, and where we're heading from here. Thank you.